Furious Bayside residents make their feelings known.
Shame, Premier, shame!
Times are tough for investors trying to offload units and apartments here in Melbourne. 1 in 5 is now selling at a loss.
Here's what the Victorian government doesn't want you to know. Western Melbourne's property market is in freefall. Werribee, Wyndham Vale, Melton, Point Cook. These suburbs are now getting the lowest auction clearance rates in the entire city. Just 61.5% clearance in the west, compared to 72.5% in Melbourne's outer east. And it's not just auction performance. Western Melbourne houses are consistently appearing in the bargain basement sales every single weekend. In November 2024, a house in Werribee sold for just $410,000 at auction. That's less than what people paid 5 years ago. While Premier Jacinta Allan announces stamp duty concessions and planning reforms, homeowners in Western Melbourne are watching their property values stagnate, or worse, decline, while the rest of Melbourne slowly recovers. And here's the brutal truth. It's about to get worse. And stick around, because I've built a free tool that'll show you if your Western Melbourne suburb is in the danger zone or if it's actually a hidden bargain that everyone's missing. In this video, I'm breaking down the exact numbers, which suburbs are getting absolutely hammered, and why the government's solutions won't help Western Melbourne at all. Let's start with the data, because the scale of this crisis is absolutely cooked. According to the Real Estate Institute of Victoria's auction data, Melbourne's West region has consistently recorded the lowest auction clearance rates in the entire city throughout 2024 and into 2025. West region clearance rate 61.5%. Outer East region clearance rate 72.5%. Northeast region clearance rate 71.0%. Southeast region clearance rate 70.6%. The West, that's Werribee, Wyndham Vale, Melton, Point Cook, Truganina, Hoppers Crossing, Tarnett, is underperforming every other region in Melbourne. A 61.5% clearance rate means nearly 40% of properties that go to auction don't sell. That's a market failure. Now here's where it gets even more disturbing. Every single weekend when REIV releases its auction results, Western Melbourne suburbs dominate the bargain house sales category. That's the bottom 5 sales of the entire weekend. Let's look at the pattern, because the numbers for November 2024 are absolutely brutal. Western Melbourne didn't just underperform, it dominated the bargain basement sales for the entire city. Werribee recorded the lowest house sale in Melbourne at a shocking $410,000, while another property there only managed $486,000. Melton and Wyndham Vale were consistently hammered too, scraping in at just $465,000 and $498,000 respectively. Fast forward to June 2025, and the market is still completely cooked. Wyndham Vale took the hit for the lowest sale of the weekend at $422,500. The rest of the region remained stagnant, with Melton sitting at $441,300 and Werribee stuck at $470,000. While the rest of Melbourne recovers, these suburbs are appearing in the bottom 5 sales week after week. By July 2025, we see a slight shift, but the gap is still a canyon. Wyndham Vale is trading at $463,000, and while Truganina and Tarnett pushed into the 500s, hitting $520,000 and $556,000 respectively, this is still a market that is being left behind. These aren't exceptions. This is the disturbing norm for the West. You see the pattern? Week after week, month after month, Western Melbourne suburbs are the cheapest houses selling at auction across the entire city. And these aren't exceptions. This is the norm. Meanwhile, the top end is a completely different world, with Fitzroy hitting $5.7 million and Armadale smashing a massive $7.7 million. With Camberwell, Hawthorne and Deepdene all clearing multi-millions, the gap between inner wealth and the struggling West isn't just wide, it's a canyon. Point Cook, one of the largest suburbs in Western Melbourne, saw house prices grow 23.5% slower than the Melbourne average over the past year. That's not a minor difference. That's a market that's being left behind. And it's not just Point Cook. According to Werribee's latest property data, the vacancy rate sits at 4.0%, classified as unfavourable by property analysts. A 4% vacancy rate means there are more rental properties than tenants want to rent them. That's oversupply. And when you have oversupply, prices fall. So how did Western Melbourne turn into the bargain basement of Melbourne's property market? It's not one factor, it's multiple crises hitting at once. Factor 1. Massive oversupply. Between 2020 and 2024, Western Melbourne went on a housing construction binge. New estates in Wyndham Vale, Truganina, Tarneit, Rockbank, thousands of house and land packages hitting the market simultaneously. The supply was concentrated in these outer growth corridors, and while population was growing, the number of new houses being built outpaced demand. Result? Oversupply. Melbourne had 90,000 new listings in 2023, but only 81,203 sales. That's an oversupply of nearly 9,000 properties. And Western Melbourne, with its new estates and mass construction, bore the brunt of this oversupply. Factor 2. Infrastructure can't keep up. Western Melbourne's population has boomed. The Wyndham City Council area, which includes Werribee, Wyndham Vale, Point Cook, Truganina, is one of the fastest growing municipalities in Australia. But here's the problem. The infrastructure hasn't kept up. Train lines are overcrowded. Schools are at capacity. Healthcare services are stretched. The Westgate Tunnel project, promised to improve connectivity, has been delayed multiple times and won't open until late 2025 at the earliest. When infrastructure lags behind population growth, property values suffer. Buyers don't want to spend 90 minutes commuting to the CBD. Families don't want overcrowded schools. And investors? They avoid suburbs with infrastructure deficits. Factor 3. Victoria's anti-investor policies. The Victorian government has systematically driven investors out of the property market with what one analyst called a cocktail of taxes. Key policies. Land tax threshold reduced from $300,000 to $50,000, effective January 2024. Additional 0.1% land tax for properties over $300,000. Vacant residential land tax expanded statewide from January 2025. Stamp duty concessions for off-the-plan removed. Let's compare land tax thresholds. Victoria, $50,000 threshold. New South Wales, $1,075,000 threshold. Queensland, $600,000 threshold. Victoria's threshold is a fraction of other states. That means investors holding properties in Victoria are paying massively more in land tax than if they owned in NSW or Queensland. Result? Investors are selling up and leaving Victoria. And when investors leave, rental supply drops, but so does buyer competition. Western Melbourne, the most affordable segment, is feeling this hardest. Factor 4. Rental regulations. Victoria introduced some of the strictest rental laws in Australia. Landlords now face limits on rent increases, restricted eviction powers, mandatory maintenance standards. For landlords, this increased risk without increasing returns. Many decided it wasn't worth it and sold their investment properties. Western Melbourne, with its high concentration of investor-owned properties, got hit hard. Melbourne isn't one property market anymore. It's two completely different markets operating simultaneously. Inner Melbourne is operating in a completely different reality, with clearance rates hitting a massive 75 to 80% and properties flying off the market in just 20 to 30 days. Prices are stable or climbing, sitting comfortably between $2 million and $7 million as the wealthy insulate themselves from the downturn. Meanwhile, Western Melbourne is stagnant, with clearance rates slumped at 61.5% and homes lingering on the market for up to 40 days. Prices are flat or declining between $410,000 and $610,000, confirming that while the inner city recovers, the West is being left behind. Here's why this matters. When inner suburbs recover first, it creates a wealth gap. People who own in Toorak or Hawthorn see their equity grow. They can upgrade, refinance, invest. People who own in Werribee or Melton, they're stuck. No equity growth, no ability to leverage. And it's not just about investor strategies. For homeowners in Western Melbourne, this is their family home. They're watching neighbours struggle to sell. They're seeing auction clearance rates drop. They're realising they can't move without taking a loss. The gap between Melbourne's median and Western Melbourne medians is widening. That's a market divergence. And it shows no signs of stopping. If you're wondering, is my suburb going to recover? I've linked a free analyzer tool in the description. It'll give you a risk score for your exact suburb and tell you whether to hold, sell, or buy more. You can access it for free, link in the description, or scan this QR code. So what's the Victorian government doing about Western Melbourne's property crisis?
Today we can announce that for apartments, units and townhouses, the off-the-plan stamp duty concession that cuts upfront costs for buyers will now be extended to everyone.
In October 2024, Premier Jacinta Allan announced stamp duty concessions for anyone buying off-the-plan properties. No price caps. Buy off the plan, pay reduced stamp duty. For a $620,000 off-the-plan property, you'd save roughly $28,000 in stamp duty. Sounds good, right? Here's the problem. Problem number one. This only helps new buyers purchasing new properties. It does nothing for the homeowners in Werribee, Melton, Wyndham Vale, who are stuck with stagnating property values. Problem number two. Western Melbourne already has oversupply. Encouraging more construction with stamp duty breaks makes the oversupply worse. Problem number three. Off-the-plan purchases come with massive risks, 2 to 3 year settlement delays. Construction companies going bust, multiple collapses in 2024. Potential defects won't be known for years. Problem number four. The policy incentivizes buyers to choose new off-the-plan properties over existing stock. This makes it even harder for existing homeowners in Western Melbourne to sell. The government is trying to stimulate construction when Western Melbourne's problem is too much construction, not too little. It's policy mismatch at its finest. So where does Western Melbourne's property market go from here? Best case scenario. The West Gate Tunnel opens. Infrastructure catches up. Interest rates drop significantly. Buyers regain confidence. Auction clearance rates slowly climb back towards 70%. Prices stabilise and begin modest growth by late 2026. But this requires government infrastructure investment. Interest rate cuts 0.5 to 1% reduction. No further anti-investor policies. Improved transport and schools. Realistic scenario, Western Melbourne underperforms for another 2 to 3 years. Prices remain flat while inner Melbourne recovers. The gap widens. Homeowners who need to sell take losses. Investors avoid the area. Eventually, affordability attracts new buyers. But recovery is slow. Worst case scenario, more investors exit Victoria. Construction continues despite oversupply. Infrastructure stays inadequate. Interest rates remain elevated. Auction clearance rates drop below 60%. Forced sales increase. Prices fall 5 to 10% from current levels before eventually stabilising. We're currently tracking somewhere between realistic and worst case. Western Melbourne is underperforming, investors are leaving, and the government's policies aren't helping. For homeowners in Werribee, Wyndham Vale, Melton, Point Cook, Truganina, you're facing a property market that's fundamentally broken. Here's the truth about Western Melbourne's property crisis. It's the result of oversupply, inadequate infrastructure, anti-investor policies, and a government that's focused on boosting construction rather than supporting existing homeowners. Western Melbourne suburbs dominate the bargain house sales every single weekend. Auction clearance rates sit at just 61.5%, the lowest in Melbourne. Houses that should be worth $600,000 are selling for $410,000. Point Cook house prices grew 23.5% slower than Melbourne's average. Werribee's vacancy rate sits at 4.0%, signalling oversupply. This isn't media hype. This is documented by REIV auction data, CoreLogic analysis, and property market reports. The numbers don't lie. While Premier Jacinta Allan announces stamp duty concessions for off-the-plan purchases, a policy that helps developers and new buyers but does nothing for existing homeowners, families in Western Melbourne are watching their property values stagnate or decline. If you own Werribee, Wyndham Vale, Melton, Point Cook or Truganina, you're not alone. Thousands of homeowners are facing the same crisis. And the government's response isn't just inadequate, it's making things worse by encouraging more construction in an already oversupplied market. I'll be covering Western Melbourne's property market every week, tracking auction results, analysing infrastructure developments, and holding the government accountable for policies that aren't working. Subscribe to Aussie Explained so you don't miss the next video where I'll be breaking down exactly which Western Melbourne suburbs are at the highest risk of further price declines and which ones might offer value for strategic buyers. But before you go, if you own or you're thinking about buying in Western Melbourne, grab the free Suburb Risk Analyzer. Check out the link in the description or scan this QR code. It'll show you the actual data, auction clearance trends, oversupply risk, infrastructure ratings, and whether you should hold, sell, or buy right now. Thanks for watching. See you in the next one.